Focus on earnings, and it is the big earnings season as we come into May as well. IIFL Holding has clocked a steady fourth quarter. While total income has risen about 10%, profits have surged almost 4% to come in at 136 crores. To discuss the outlook for the markets and the company going ahead, CFO of IIFL Holding, Prabodh Aggarwal, now joins us. Mr. Aggarwal, thank you so much for taking our time. Just take us through how this quarter has been for the markets, at least a bit of a roller coaster ride until the budget. Has it met with what you were working for as your internal estimates?
Okay, see, the quarter and the year were pretty good. For the full year, our profits have grown by 14% YOY. This is driven primarily by the NBFC and the wealth segments, while the capital market segment has degrown. Even for the quarter, the NBFC profits have grown very strongly by 18%, and the wealth profits have also grown, while the capital market profits have declined. So overall, we think, we did well, and we have created a good sort of base in terms of the infrastructure, the people, the technology, the systems to be able to grow steadily in future in the two key businesses of NBFC and the wealth. Capital market is a profitable business for us, the broking, and as and when capital market conditions look up and the market volumes go up, we should be benefiting both on the retail and the institutional front.
All right, you talked about the NBFC as well as the wealth business. Prabodh, financial product distribution has been a very fast-growing segment for IIFL. How do you plan to grow that, and what's the outlook?
Yeah, so that is mainly the wealth business, and if you look at our wealth business is now the fastest growing private bank in India, with assets under advisory management of close to 80,000 crores, and of course it has grown at more than 30% CAGR over the last 4 years. We think that there is enough opportunity in this segment. The private wealth which is available, which is slowly moving to professional managers like ourselves, so that should keep our growth strong in future. So I think this is, and General Atlantic, as you know, has just taken a minority stake in this business, and that's a strong partner. We have also started a wholly owned subsidiary, NBFC, for the wealth business, because providing leverage to our HNI clientele is a key part of the business. And now this NBFC has been formed, which is well capitalized with 900 crores, which has come in from General Atlantic. So that should provide us enough leverage opportunities in future. So we remain very positive on the outlook for the wealth business.
Prabodh, let's talk about the fund-based, the NBFC part of your business as well. Where do you see the demand really coming in from? Is it from the affordable mortgage loan housing segment? Where are you seeing the AUM pickup really happening for you?
Okay, see, if you look at our NBFC business, our AUM has grown 21% YOY, and currently it is at 19,500 crores. And the growth has come primarily from three segments: retail mortgages, commercial vehicle, and SME loans. And at the same time, we have degrown two businesses. One is the large mortgages, and the second is the gold loans. The other segment, capital market, has also grown at a very slow pace. We think the retail home loan segment will be the fastest growing in future too. We see a lot of opportunities, as you mentioned, one in the affordable housing segment. We also see opportunity in the regular home loans segment to the salaried and the self-employed categories. We are also looking at targeting our home loans at different customer segments, like the informal income, the self-employed, non-professional category. So I guess the home loan should be a fast-growing segment in future. Currently, the retail home loan constitutes to about 41% of our total loan book. This should move up marginally going forward.
Prabodh, what about the NPA picture? I mean, it's relevant and quite prevalent in the NBFC sectors as well. Do you see another at least 2 to 3 quarters before these concerns start to settle down? You've moved recently, the entire NBFC, to the new declaration formats for NPA and the number of days cycle as well.
No, actually, if you look at last quarter, our gross and net NPA ratios have declined. So at the end of FY16, our gross NPAs were 1.4%, our net NPAs were 0.5%. Both of these ratios have declined Q on Q. So our NPA ratios are fairly low and we are well provided. Our total NPL coverage currently is 89%, including standard asset provisioning. And the overall provisioning is well above the RBI norms. So at the moment, the asset quality concerns are fairly contained. We will be moving to 120-day NPA recognition norms in the current quarter. Because of that, we may see a slight uptick in the NPA ratios, as we saw in the first quarter of last year as well. But then from second quarter onwards, again, we should be able to contain and bring down NPAs to the current level.
What about margins at this point in lending rates? What is the trajectory, Prabodh, that you see going forward?
So, our lending rates would be determined by the market rates. But yes, last year our NIMs did come under pressure. Our NIMs have declined to 6.1%. And that is because of the change in asset mix. As I mentioned, we reduced exposure to some of the higher yielding segments like gold loan and large mortgage loans. Those are two very high yielding loan segments, but we consciously brought it down to rebalance our portfolio and to de-risk our portfolio. But now that the rebalancing has happened, I think now the margin should settle at current levels. And so we see steady margins going forward.
Prabodh, at the beginning of the interview, you did mention that the capital market activities would recover the improving economic scenario as well. But margins even in that segment have declined. Do you see that continuing to be a pressure point in FY17? How do you see the capital market segment performing for you?
So if you look at today, the contribution of capital market is only about 10%. So if you look at our total profits, 65% of our profits come from the NBFC, 25% comes from wealth, and only about 10% comes from the capital market business. And yes, the outlook is very unpredictable. It will depend upon the capital market conditions. It is a profitable franchise for us, both retail broking as well as institutional broking. And as and when market volumes pick up, I think the contribution of this segment can be higher.
All right, Prabodh, thank you so much for joining us. That's Prabodh Agarwal talking to us from IIFL Holdings. He's the Group CFO there, saying that margins may see a bit of pressure going ahead, but likely to stay around these levels. NPAs levels will rise slightly as they move to the new norms as prescribed by the RBI. Well, you've got a pref issue of Bank of India coming in.